Welcome back, everyone. Next up, we have Grounded Lithium Corp. It trades on the OTCQB under the symbol GRDAF and on the TSXV under the symbol GRD, and is a lithium brine exploration and development company that controls approximately 3.7 million tons of lithium carbonate, equivalent of inferred resource over our focused land holdings in Southwest Saskatchewan. Please welcome the VP of Finance and CFO, Greg Phaneuf. Welcome, Greg.
Thanks, Anna. Thanks for having us.
All right, we look forward to hearing your presentation. Take it away.
I'll just dive right into it. The energy transition shift, the critical minerals, national security interests, deglobalization, among other factors, all point to arguably a generational opportunity for companies and investors alike to profit from the battery supply chain industry. And over the next 20 minutes, I'd love to share with you our story at Grounded Lithium, which we believe is a compelling investment opportunity. You can see here on the first slide, and as Anna mentioned, we are a lithium from brine company. So I'm not sure how many of the listeners out there have done some research in the current sources of lithium in the world, but lithium from brine is somewhat of a new and exciting area. The current sources of lithium in the world are either large open pit spodumene mines or either evapoconcentration ponds, large salars as they're called in Latin America. Both of those do satisfy the current world's needs, but they do come at somewhat of an environmental or sustainable cost. In our operation, you can see the picture, we're simply drilling wells. As we'll talk about in the coming slides, our team here is comprised of seasoned oil and gas professionals. We've done this kind of operation for 20 to 30 years, if not longer. We're applying those same techniques, skill sets to an exciting industry, lithium from brine. There is a technology aspect to it, which we'll talk about, but it's a really simple system, simple process, and a very small footprint when it comes to the disturbance of the land. You can see there, we're in the middle of a barley field in Saskatchewan, my home province, by the way. Just trying to advance the slide here. There we go. The usual disclaimer, you can find that on their website. So again, we are oil and gas experienced professionals. We have a history of success. Our clear direction is to build ultimately a producing mine, or in this case, lithium from brine. Our vision guides everything we do. We're moving towards a built-to-last company, and our vision, quite simply, is to build a best-in-class, environmentally responsible Canadian lithium producer. And if there's three things I would ask you to take away from this presentation, it's as follows. One, certainly the macro backdrop. Compelling times, opportunities abound in the battery supply chain industry. We have a proven team, which I'll talk about in a minute. And third, in resource businesses, it's all about ultimately the resource or the rock. And we believe we have top decile rock. You can see there a picture, that's the Gregs as we call it. Our CEO is Greg Smith. I'm Greg Phaneuf. We keep things simple at our company. We have a lot of the same names for our team. So the Gregs in front of our first drill that we did last summer in Saskatchewan. Here's our team. So I mentioned Greg. Greg and I have known each other for about 4 or 5 years. Instant alignment when we got started and first met. Greg's a proven leader when it comes to resource development. He's built companies from the ground up and seen successful exits. Likewise for myself. We supplemented the Gregs with Dale Shipman, Jeff Spears, Wayne Gaskin, and Lawrence Fisher, each experts in their disciplines. We have the core team to move this business forward and create value for our shareholders. We equally have a very solid and proven board of directors. It's all about the team in some respects. We have John Wright, Dave Antony, and Mark McMurray. There are independent directors. John's a proven CEO in the resource development business. Dave Antony, longtime CFO, capital markets expert when it comes to junior companies in the public sphere. And Mark McMurray is a geologist as well that has spent a lot of his career in the investment banking business. So great contacts when it comes to the markets and A&D. We also have a very competent suite of advisors, and we'll draw your attention to Wayne Monnery. He's important in the sense, we'll talk about this later on in terms of our technology selection process. Wayne is a PhD in chemical engineering. He has had lots of experience assisting others when it comes to direct lithium extraction, or DLE. He's a key hand, and we'll be working closely as we talk about it in terms of our technology selection for DLE. Excuse me. I think most of you probably know the macro backdrop. It's one that Greg and I spent a lot of time on in terms of starting up the business, seeing the energy transition movement not become really a fad. It's a global movement. It's here to stay. And when you think about what the world needs in terms of its lithium needs, whether that be primarily for the EV cars, but also goes into your cell phones, your laptops, and other applications, the critical minerals that are necessary for all that to actually work are denoted on that slide there, kind of in the middle of the panel. Lithium, cobalt, nickel, graphite, all of these minerals require extensive investment to meet the world's demand by 2035. In particular, lithium, given that we're a lithium business, 59 mines are estimated by this case Benchmark Minerals to satiate the world's demand by 2035. That's a big number, especially when you consider NIMBY effects, what it takes to develop mines or other sources of lithium. We intend to be a part of that, but there's certainly a macro backdrop that is very supportive of the critical minerals space. And when you think about that in the context of North America, given that we're a North American company, North America is arguably 10 to 15 years behind Asia. And let's kind of specifically talk about China when it comes to the upstream sector, but more particularly the processing of raw lithium into the components that go into your Tesla or other cars. There's a processing facilities, there's lithium cell development, anode and cathode manufacturing. Not a lot of that exists in North America. And I'm sure many of you are aware, under our administration here in Canada or the Biden administration in the United States, there's a concerted effort to catch up. Many announcements are being made. A lot's being publicized in terms of government support programs, which we as an upstream lithium company tend to take advantage of. So lots of money being spent, and North America is trying to catch up, which is a great macro context for our company. We're very proud of where we've come. We've only really been around for 2.5 years. We're focused on the objective of becoming a commercial producer. Our time frame is 2026, but to get there, you have to lay the foundation, and we've been doing that from day one. Very smart, I guess you could say, or concerted about our capital structure. We've been smart about acquiring land at low prices, and we've done a lot of things corporately to set the stage, build a foundation for Grounded Lithium to build upon itself, to again ultimately become a commercial producer in 2026. As we say, and maybe this is a bit out of order, but we had spent a lot of time, to Greg's credit and others around Greg, in terms of no different than oil and gas or any kind of resource assessment, is where is the resource? How does it get trapped? Where does it move to? Where's the best places to do that and to find it? And in our case, as we say, we didn't choose Saskatchewan, despite the fact that I'm from there, among others on the team. We chose Saskatchewan because the rock led us there. And again, in resource development, it's all about the resource. High quality resource leads to high quality product, leads to low cost operations. And we, as a result, chose where we are, which is in Saskatchewan, as Anna mentioned, Southwest Saskatchewan, near a town called Kindersley. Saskatchewan itself, if you haven't done any research or know about it, it's ranked 3rd in the Fraser Institute's 2020 study as a place to do business in terms of investments and mining. That's a great thing. That means permitting is efficient. There's ample services. The community and the government support it. There's effective tax rates, both on a royalty structure as well as corporate taxes. So it's a great place to conduct operations. Not only that, where we are, it isn't like we're up in some remote place in the province. We are right close to a number of facilities, infrastructure, which would support our project. Namely, there's existing paved highways, there's rail lines, there's all kinds of gas lines running in around our area. If we were to think about powering our facilities, either through our own cogen or using Sask Power, which is the dominant utility in the area. So all these things allow us, in our view, to ultimately have a very profitable and low-cost operation. As you can see there in the little graphic or the cartoon in the top right, that is where we are, the orange button. That is Southwest Saskatchewan. We're right on trend with a number of other lithium from brine players, namely E3, which is concentrated in Alberta, Prairie Lithium to the southeast part of Saskatchewan. Just drilling down on where we are, and I mentioned, the rock. We are in what's called the Dupro section of Saskatchewan, known as the Leduc in Alberta. It's the same kind of convention. It's just different names when you cross the province. But this has been a prolific source of energy development in both provinces. In our case, again, to some of the points I hinted at, where we are in the Dupro section was specifically chosen because it does not have, in our view, hydrocarbons, believe it or not. And hydrocarbons and H2S can present more challenges in terms of your cost structure. It isn't that you can't deal with it, but you have to have some of this pre-filtering done if you do have them in your reservoir. Again, we chose this area because we don't have those properties. And in resource development, low-cost operators typically win. So that's why we chose where we are. I'm going to be honest, I am no geologist, and I love to hear Greg talk about this, but this is the schematic cross-section of where we are moving from to the left of that cartoon in Alberta to the right of it, which is southeast Saskatchewan. And without going into a geology lesson, where we are is shallow. We're 900 meters from the surface to the top of the formation. That has clear advantages when it comes to costs. Deeper depths mean longer drill times, larger rigs, higher day rates, higher cost structure. So when you combine that with the fact that I mentioned no hydrocarbons or H2S in our area, it just means low-cost operations. And again, in oil and gas resource development, low-cost operations typically win. Again, our team is very technically astute. We didn't look at this as just simply having yellow on the map. We wanted to be very targeted in our selection of lands. We've been doing that since day one, whether acquiring lands from the Crown or the government or acquiring lands from freehold landowners. All of that has had the express purpose of that every section of land we believe is developmental. Again, we're not buying land just to have a larger land base. It's targeted. As Greg would say, we've used rigor from day one in assessing our land position. So we're sitting on, as a slide coming up, 300 sections or 300 square miles, 79,000 hectares, 192,000 acres, depending on your convention, of land in Saskatchewan, which we believe will support multiple projects. So to that point, this is our land position. 300 sections. We've drilled our first wells, denoted by the call-out box. That first well that we did was only the second lithium well ever in the province of Saskatchewan. So it just goes to the whole, in our mind, macro tailwinds. Saskatchewan is very interested in developing this industry. There's lots of economic rent to be had by all, certainly the province and its citizens, but from a selfish perspective, from a grounded shareholder perspective. We can develop these lands either on a contiguous or checkerboard basis, so I wouldn't be alarmed by what you see in the map. Certainly we're active, and typical in oil and gas resource development, we will look to continue to fill in that map sheet. As Anna mentioned, we have 3.7 million tons of inferred lithium carbonate equivalent. We're very proud of that number. Again, we believe that has a high prospectivity to develop economic projects. So that point, this kind of just shows some of the work that Greg and his team have done over months and months and months. Not just looking at it from a very superficial basis, but very detailed work. We've gone so far, and keep in mind this is a bedded or a sedimentary deposit. It's all about fluid dynamics, which typically oil and gas guys do every day. So there's lots of work that goes into how does the brine, which is a liquid form, how does it flow, once you're drilling a well, how does the whole reservoir react? We've done extensive modeling in that regard, and we'll be communicating those development plans in the near future. But a lot of work has gone into assessing our resource to get to the 3.7 million tons that you see there on the screen. That 3.7 is done and evaluated by Sproul, a leading resource evaluator here in Canada. I think they do a lot of work in the States as well. One of the key things about a lithium from brine operation, and it kind of goes back to, we're a bit of a hybrid between oil and gas and mining. We're not really a mining company per se. Like you've seen the pictures and what I've kind of articulated, it really is an oil and gas or a drilling operation. And while if you were to compare grade, which is certainly an important factor, the grade from a lithium from brine operation would not be comparable to, let's say, a grade of a salar in Latin America, which are measured in hundreds of parts per million. Our grade, as tested in a few different ways, one, our own test well, as well as adjacent oil and gas wells that we can use to assess concentrations, put us in the mid 70s to low 80s parts per million. That's one factor. The other factor is deliverability. This is where it comes down to some of the expertise in oil and gas in fluid dynamics and flow. On our first well that we drilled and completed and tested, that well, in our view, could produce up to 30,000 barrels per day of brine. There's no way that you would do that. You would want to make sure you're using proper reservoir management. And as we communicate on this slide, we would stabilize that rate to about 19,500 barrels per day. So that's the other toggle. You've got deliverability and you've got grade, both of which, when we look through the economics of our project, are wildly accretive, but you have to have rate. So that's an important point. These two lines here you see that are pointed out, those are rates from a water flood operation by one of our neighboring oil and gas companies. Those were, as they'd say, fit for purpose. They weren't done and developed to be lithium from brine operation, but more water flood. That gives us a lot of evidence and comfort that this reservoir can produce brine for a long time at sustained rates. The big question in a lithium from brine operation is the technology. And one of the fundamental tenets that Greg and I had when we started the company is that we know what we're good at. We're good at resource development and developing resources. We know enough about technology to be dangerous, but know where we need help. And in that regard, we engaged Hatch Limited, or Hatch Engineering, a world leader when it comes to lithium. Actually, they've advised a number of companies around the world on lithium. We've engaged them to help assess what is the best technology for us to use given our chemistry of brine. We announced that contract back in October of last year, and we're working very hard as we speak to assess what the best will be. We've narrowed it down to 4. As we communicated in our press release, that'll be quickly moved down to the top 2. And then from those 2, as you'll see here in a later slide, we have suitable amounts of brine that we took from our first well to conduct longer-term tests to see which one of those 2 top technologies gives us the best efficacy, the best rates, and the best economics, frankly, in terms of our project. That will feed into what we call, and what the industry would call, a preliminary economic assessment. It'll go into the economics of our project. It's all coming together, and we'll talk about this later on in terms of the catalysts over the next 6 to 12 months that we see. So the DLE technology itself is one that's been used fundamentally in other industries for decades. All we're doing here is applying it to the lithium space. And it isn't like we are cutting new territory with Hatch. This has been done by many other companies who are arguably ahead of us, larger, ones that we look to become down the road, that we are cheering for, certainly in terms of them proving up DLE around the world. And as they say, a rising tide raises all ships. So, looking at companies like Lake Resources, they've put out some positive announcements regarding DLE. They're using a technology with Lilac. We're cheering for them, obviously. But again, this technology is being looked at by some 50 to 70 different companies, and someone will crack that nut on a commercial scale. It can be done certainly in a lab. Can we do it on a commercial scale? The answer, we believe, is yes. And once we find that, we'll apply it to our operations here in Western Saskatchewan. The rest of this schematic cartoon really is something that's not that difficult in terms of polishing or refining. It is something that we've done many times in the oil and gas space and will continue to do here in a lithium enterprise or operation. I mentioned the supply. I just like to kind of show people what it really means. You can see there some totes. That's about 40 barrels of brine that we would use then to ship to our top 2 chosen technologies to test. I mentioned Hatch. You can see there on the left, that's the same location of the rig that we had early on the top part of a slide. That's in the middle of winter now. Saskatchewan does get cold. So such things as doing evaporation concentration ponds in Saskatchewan or Canada just clearly wouldn't work. Hence the application or the opportunity from a lithium from brine using DLE. I mentioned at the outset, part of our vision is to be environmentally responsible. Sustainability is a key factor that's governing the world, quite frankly. Sustainability does come with some responsibilities. And again, the lithium from brine industry or opportunity is one that I think merits a lot of attention. I mentioned earlier the current sources of lithium. There's some pictures there. The salars in the top left of that little collet panel, that open pit mines in Australia, neither of which really works in the modern society, and nor are investors or the world wanting to see that anymore. So what you see there on the bottom panel, again, one of our esteemed peers is the Standard Lithium's operation in Arkansas. That's what you would see really ultimately in terms of a processing facility. So it's very low environmental footprint, self-contained, and ultimately all that land could be easily reclaimed once the operation's finished. From a government perspective, just to kind of give a soundbite on that, both the US and the Canadian governments have announced significant programs when it comes to critical minerals. Our country here has announced a $3.8 billion strategy funding for companies in this space. The Inflation Reduction Act in the United States, similar, bigger scale, bigger dollar amounts. But in both cases, Canada, and specifically grounded lithium, would qualify. Under the Inflation Reduction Act, Canadian companies are seen as domestic supplies. So clearly from a North American context, there would be some government funding available for operations in this regard, which we intend to explore. In terms of, I got about 10 minutes here, I think, left. In terms of catalysts, 2022 was a big year for us. We knocked off a lot of achievements to build the foundation. We're not resting on our laurels. We want to move this to commercial operations as fast as possible. So the DLE technology selection is critical. It's important. I mentioned the PEA. If you follow the space, PEAs are very important. It does provide some third-party assessment or validation of your economics. We obviously have a very detailed corporate model, but having a third party go through with a bit more fine-tooth comb in terms of all your assumptions on CapEx, OpEx, pricing does give some validation to your project. We would hope to have that done by the end of Q2, which would then hopefully re-rate our stock. Lab pilots, that gets back to the work with Hatch and then picking the top 2. We get to leverage off of those 2 top technologies, existing labs. We don't have to incur the costs or the expenses of constructing and maintaining a lab. Again, goes back to our DNA of being more of a resource company, not technology. If we move successfully through that process towards the end of the year, we would see ourselves in some stage of design and construction ultimately of a demonstration facility on our map sheet that I showed earlier in Western Saskatchewan. That would require some additional wells, both from an extraction point of view, as well as disposal or injection of the brine that's been processed. That we would be doing as part of the overall demonstration of our facilities. And all along, I guess just the last piece there, we are knowledgeable in the space. Resource development does come with just obviously increasing it, whether through crown land sales, contractual deals, partnerships, joint ventures, or A&D, all of which we have the resources and the experiences in the company to do. Just real quick, a couple other slides here to wrap up. On the capitalization, we were very conscious at the beginning of keeping a clean and simple capital structure. We have absolutely no debt. We just raised money in the fall of last year through a special warrant financing. So we're sitting at about $3 million in cash Canadian on our balance sheet with a modest burn rate. That $3 million would clearly take us through some of those catalysts I just showed on the previous screen. From an investment point of view, we're all incentivized here as management and insiders. We own about 14% of the stock. We've been investing at every single round. We've given, give or take, invested about $700,000 of our own money to get to that 14%. We're very proud of the fact that we have some early institutional following. 17% of our stocks held by institutions and the balance held by retail, high net worth, and some larger family offices. The trading history there in the middle, we came out with an 18-cent financing to begin with, trading at 30 cents, about a 20 million market cap. A decent amount of shares trade per day. We're clearly focused on moving that in the right direction to provide liquidity for all shareholders. If we have all of our incentives, warrants, etc., exercised, that brings a further $8 million into the company, which would be a form of financing for part of 2023. Message here, everyone, is that we're aligned with shareholders. What's good for us is good for shareholders and vice versa. Totally committed. I guess the fourth point, if I could leave it with you, in terms of the three main takeaways, the fourth being a compelling entry point. There's many ways you can value companies in the resource business. Two that are detailed on this slide. One is a recent market comp that just recently was announced last month or month before. That's our friends at Prairie Lithium. They're in the southeast part of the province of Saskatchewan. Arizona Lithium, a Australian listed company with assets in Nevada, I think it's Nevada, announced a $70 million acquisition of Prairie Lithium. Prairie Lithium has a 4.1 million LCE number announced. That compares to our 3.7. So when you do math, I know comps can be dangerous, but just simple, apples to apples, that $70 million puts their EV per ton of $17 on their tonnage. You put that to 3.7, arguably our value is $64 million. Our current market cap is 20. So hence the point about a compelling investment opportunity. We also have showed on this slide a bit of a glimpse of our model. This would be a part of a PEA. This is unrisked, but a lot of this would be validated by other parties as part of that PEA assessment. And clearly, from a 20 million market cap company to an NPV over $1 billion, there's lots of possibility there. This is unrisked, and lots of work to be done to get that. But it just shows you, in our view, the value proposition that Grounded Lithium presents itself to investors. Another way of saying it, as you move through the execution of the project, you de-risk it. Those investing at this stage would afford the benefit of higher returns than those who invest later on once we de-risk things. So again, we're aligned, we're investors each and every round, and believe there's lots of value to be achieved as we approach the intrinsic value of our company, which is kind of the last slide here before I'll take questions. That's our NAV chart. We're early stages, early on, lots of value that we believe can be generated and accrue to investors. So to wrap up, why invest? Global energy transition shift. I think there's all kinds of opportunities there for people to do well as an investor. We have a proven team. I would certainly encourage you to go to our website and read our bios of the management team and of the directors. So we have a team that's done this before, oil and gas, and we're applying those skills, which really is a straight pivot, straight layup, if I can use that language, into the lithium from brine business. We're in a great place in Canada. Saskatchewan is clearly a place that welcomes and wants business. Greg and others in our team have met numerous times with Saskatchewan regulatory bodies, very positive discussions. We're working cooperatively with them to make sure that the regulatory environment is one that's conducive to build a business, build a lithium industry in the province. Lastly, early entry point, lots of torque in our stock. And I think it's just a compelling opportunity. And with that, Anna, I will open it up to questions.
Great. Great job, Greg. Fascinating stuff here. We are short on time, but let's see how many we can get in. Let's talk about Grounded's business plan. How does it differ from other current sources of lithium supply found around the globe?
Well, certainly from an operational perspective, as I kind of have mentioned, we're not a mine. We're a sedimentary fluid dynamic business. So the whole extraction process compared to existing sources of lithium is very different. Having said that, some of the Latin American operations are in fact moving to DLE or extraction methodologies, not having those large evaporation ponds. So operationally, certainly we're very different. We're operating in a jurisdiction that is very conducive to business. That's, I guess, one of the luxuries of being in North America. But I think to answer your question, it's one more operationally for sure. Ultimately, you get to the same product, a battery grade lithium salt. And that trades at a very high price on the current market environment. And we don't certainly model the current prices, but even at a much lower price, there's lots of return ROI to investors who invest.
And talk a little bit about what the near-term catalysts are for the company and why should an investor consider Grounded?
Yeah, numerous catalysts. I think as we keep executing on our business plan, the selection of a technology, I think you can watch for news flow in that regard. The communication of the completion of a PEA is a clear catalyst. If you look at some of our esteemed peers ahead of us who have published PEAs, once the PEA is published, there's a complete re-rate on the stock. So investors investing today would be in before that news flow. So there'll be some return potential on that. And I guess just moreover, add to your question, as we continue to execute, we do fancy ourselves ultimately as a producer. And those who are investing in our story at early stages would reap the larger rewards as we de-risk the project. So as a person watching the story, I would continue to watch for news flow. We'll be coming out potentially with moving some of our inferred resource to indicated, just to put a higher quality or higher certainty on our resource. You may also see some news flow regarding our development plan. Right from day one, we thought about how we would develop this project. So you'll see some news flow on how we would put, as we call it in the oil and gas world, sticks on the map. Where would the wells go? Where's the processing facility? Just to give, I guess, investors, we do this anyways, but give investors confidence that we're real.
And why are most of your team members ex-oil and gas professionals and not mining?
Yeah, simple put, this is not a mining operation. This is completely different. This is fluid dynamics, subsurface. You can see there just on that picture on the screen, if the screen's still up for your audience, it's all about what's below the surface. And arguably oil and gas professionals have been doing this for decades. Call it like the back of your hand. This is not a mining operation, so you have to have experience in subsurface fluid dynamics. You have to have experience in the geology. Those things aren't in a spodumene mining company's expertise. It's within oil and gas. So, lots of talk has been made by our federal leaders of transitioning our workforce from oil and gas into these, battery grade minerals or critical minerals.
All right, Greg, thank you so much for this. We are out of time right now. We've got lots of questions for you, so we'll send the questions to you so you can answer on your own. But please come back in the near future with some updates.
Would love to. Thanks, Anna. I look forward to the questions from those who didn't get a chance to answer.
All right, great job. We'll see you again soon.
Thanks, Anna.
Okay, everyone stay with us. We'll be right back.